Welcome back. You're watching bnsn on ET. Now we are live from Motilal Oswal studio. Let's talk about your queries then. Remember viewers, this is a show where we get you answers for all of your stock related queries. You can write to us on the WhatsApp number that will be flashing on your screen. To remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you're already invested in the stock, mention the buy price, the quantity and the time horizon. In that way, our experts will be able to help you better. Talking about our experts today, we have Kunal Bothra, who is joining us on technicals. And yes, we have two techies today. So we have Dhwani Patel also, who's going to help you on the technical queries, given the fact that we've seen a lot of volatility in the markets, a lot of short-term queries also pouring in. So we thought that this is the best way to address all of your stock-related queries then. Kunal, let me come first to you because the first query that I have is coming in from Vignesh, and he's writing to us from Bangalore. He wants to know, is it a good time or a price to enter CESC?
Well, time-wise, maybe a good time to start nibbling into the stock price, but then I would also believe that it's best that you start, going into a nibbling or in a staggered way, nibbling into the, the quantity or allocation for CESC, because it still looks like that the stock has not settled into a trading range. The only good part about the chart so far is that at 130 odd levels for CESC, the stock is at a divergence of almost 30-35% from its long-term moving average. 175 thereabouts is the 200 DMA for CESC. So which means that the stock is at a deep divergence. The indicators are a bit oversold, but that still doesn't indicate that a major bottom is at place for CESC. So buy on staggered way is what I would suggest for CESC if you're looking at it from a medium to long term play.
Alright, then that's a take coming in. As far as CESC is concerned, first of all, good morning to the both of you, and also Dhwani, I'll come to you on Hamsa's query, writing to us from Madurai. Wants to know about Marico, 1,250 shares, and the buy price was 480 rupees. Now he's a long-term investor, so with that in mind, what do you think about Marico then?
Good morning. And talking about Marico over here, definitely yes. On a broader perspective, if you're looking up at the perennial trend of the chart over here, we definitely see a bullish side trend being intact over here. In the recent times, we are seeing some cut and a stagnation coming in over here in this particular counter. On the higher side, 715 to 720 is acting out as a resistance over here. And on the lower side, though the support level, what we see is intact over here at 615 levels. So from these levels, definitely we can see certain respite coming in. On the lower side again, 600 if being retested. This is where you can also average into this counter. So hold is recommended in this one. 600 is the ideal stop loss that one needs to maintain over here, 590 odd levels. So this is a 10-point range in which you should maintain your stop loss. On the higher side, having crossed 690 over here, we'll see further rally coming in this counter. So hold on to it. Definitely there is some down cut over here, but on the longer term, the stock is good.
Next query that I have is coming from Lakshmi Vasu. She's writing to us from Chennai. She has queries in two stocks. One, I don't know, Kunal, if you'll be able to answer because the chart history is very limited. It is Hyundai. The buy price is 1960. What's the target for the next 6 months? And any FMCG counter that you would recommend that our viewer actually enters right now?
So I'll start off with Hyundai. Yes, the stock has a limited history, but then I think in the last 2 weeks or so, the stock has seen a very good recovery from 1650, 1600 levels to 1850 plus levels where the stock is trading right now, and that too on the back of higher volumes. So my anticipation is that this time around the stock should be able to break past about the previous highs of 1950 mark. So I think at 1850 levels, I would recommend that since you purchased at higher price points, you can look to average, but just about keep some powder dry in case if there is a mild correction further, say towards the 1750 to 1800 zone, look to average out further because that could be a decent contra point or a retracement zone for Hyundai. And the second query which you asked was for, Shil, can you repeat the stock?
Any stock from the FMCG pack that our viewer can look to invest right now?
Well, I think in that aspect, I would suggest that you can stick with the formidable player from the FMCG pack, and that's HUL. But my only concern is that these stocks still haven't formed a major bottom for themselves. Yes, price-wise they may look attractive. They are down 30% broadly from their September or 2024 highs. So maybe that could be a good attractive point for long-term investors. But generally, I've seen that these kind of stocks, they go into a double dip or at least a break below the previous lows by a huge margin. That's where these stocks eventually form a bottom. So actually something which I would recommend, but buying on staggered quantity, maybe buying 1/4 of your quantity at current levels and proportioning the rest 3/4 in a staggered manner could be a better strategy.
All right, and buying at a staggered, in a staggered manner is the advice coming in from Kunal when it comes to the FMCG pack. But the next one that we have, Dhwani, is coming in from a senior citizen who's writing to us from Tamil Nadu, wants to know about BHEL. And he has 700 shares. Buy price was 234 rupees. Currently sitting at a loss. So what do you make of this one? Should he book a loss at this point?
Okay, so talking about BHEL in particular, of course, the buying price that we are seeing is on the higher levels for the caller, and from there, the stock has definitely slipped on the lower side. On the weekly structure over here, if I'm looking up at the broader perspective, in the recent times, the stock has seen a good run up also. So definitely, there is some stagnation that we are seeing over here over in the trend, and then from on the bottoms around 185 to 186 is where the stock has made its recent support levels. I would suggest hold on to it. Given these levels break, we'll see further cut coming in. But till the time this level is intact, you can see a rally coming in back again into this counter. On the higher side, having crossed 235, which is closer to his buy price, we will be seeing the prices go higher to 290 to 93 levels. Hold on to it. Stop loss on the lower side for you over here is at 186 levels.
All right, let me take this next query then. And this one is coming in from our viewer. The viewer's name is not mentioned, I believe, but it is for you, Kunal. The viewer wants to know about what the viewer is saying. Let me actually read the message the way it is written. I have seen Kunal's relative strength comparison analysis of Nifty and Nifty of Nifty to Nifty Private Bank's performance. I have about 2,800 shares of SBI at an average price of around 774 rupees. Should I exit and switch to private sector banks or wait for some more time?
Yeah, I think it could be a good time for you to switch from the PSU banking lot towards private sector banking names. I think some of the names which I believe on a relative scale, they start to look attractive, on the charts, and specifically, with the expectation that this could turn out to be a medium to longer term rally for these names. So, there could be short term corrections here and there which could happen. But then when we're looking at a cyclical turn in terms of sectors, we are looking at, this as a potential 6 month, 1 year, 2 year kind of a trend for these names. I think in that aspect, I would expect the likes of, say, Kotak Bank, IndusInd Bank, HDFC Bank, as well as ICICI Bank, from the formidable large cap names. These stocks could probably try and give you more relatively strong returns on the medium to long term basis. That's what the stats are suggesting so far.
All right, and the next query that we have coming in from Neha, writing to us from Bengaluru, is also on a very similar sort of standpoint. She's asking about Bajaj Finance and Kotak Mahindra Bank. Dhwani, what do you make of these, and are there any targets that you have in mind when it comes to the next 1 to 2 months?
Talking about Bajaj Finance, primarily we are seeing a range breakout coming in over here on the weekly structure. On the higher side, we were seeing a certain resistance being played out in this counter since September, where we on the higher side we were not able to cross 8180 levels, and currently we are trading above the same. Definitely we'll be seeing further run up coming in this counter. On the lower side, one can maintain a stop loss at here 7750 levels, and having this hold out, we'll be seeing further rally continuing in this counter. On the higher side, I'm expecting that the range breakout that currently we have seen is of about 1,000 points over here. So from here again, adding up to 1,000 points on the higher side, 9,000 is a short-term target that one can look out for over here on Bajaj Finance. Talking about Kotak Bank over here, in the recent times, definitely we have seen that the stock has been performing into a sideways zone, and from there we are not witnessing any breakout over here. So Kotak Bank for me would be a wait and watch. On the higher side, I would recommend buying into this counter, having broken the 2,000 level on the higher side, and then further positions can be built up in this one.
All right, on that note, let's slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock related queries. Then in the next one, Kunal, that we have is coming in from Nikhil Sharma, writing to us from Dubai. Wants to know about 15 shares of Reliance that he's holding on to. Buy price was about 1,300 rupees. What do you make of this one then?
Yeah, it's a good level where you can look to start, maybe holding on to the stock. Averaging out, I would recommend closer to 1,200 mark for Reliance Industries. The good part is that the stock in the last 2-3 months from December, I think has stopped, falling very aggressively. So I think except for that first, 2-3 months of price correction for Reliance Industries from 1,600 levels thereabouts towards 1,200 mark, there was a phase where the stock had fallen very sharply. Post that, it's gone through a sideways range. But the concern for the charts is that it's not been able to break past about the intermediate highs even in this phase of consolidation. So that would indicate that maybe there could be a chance that the stock may get into a further leg of correction before we see volumes picking up as well as the indicator action to be a lot more robust. So I would suggest that since you've purchased at much lower prices than the previous major highs for Reliance Industries, just hold on to the stock. In case if it dips down back to that 1200 levels, that could be a point where you may look to start averaging out.
All right, this one is coming from Swati, and who is a regular follower of the show, and she wants to know about Kunal, a lump sum amount that she wants to deploy right now. About 10 lakhs or so is what she's looking to deploy. Is it the right time to go ahead and look at deploying the funds right now in mid-cap space for a period of about 3 to 4 years?
Well, I would suggest that just wait out for some more time. All you can do is, it's very difficult to time the market very, very precisely. But then you can look at maybe allocating 20-25% of your capital at current levels and then wait out, because it still looks like that the pain in the entire market is still not out. You're seeing the mid caps and small caps fall very sharply whenever the markets or the indices go into a correction. That generally indicates that the terminal sell-off has still not happened into the mid caps and small caps. And generally, when you allocate a major part of your capital at the a wave where the sell-off is getting intensified, then the turnaround time takes a lot of time for the portfolios to recover if you allocate full. But if you allocate in a staggered quantity, then the probability of you trying to get closer to the the lower end of the price curves for these mid caps and small caps could be at a pretty much on the higher side. So I would recommend that you can start allocating maybe 20 to 25% of your capital at current levels, but then wait out for further leg of correction. It's always best to buy once the index shows signs of confirmation from a major low or a support which it hits out. So I think it's I would recommend that you allocate the rest of the capital on phases when you see strength coming back into the mid caps and small caps.
Alright, then that's the take coming in as far as that entire space is concerned. But the next one that we have, Dhwani, is coming in from Pratiksha, writing to us from Oman about a couple of counters. So the ones that she's looking at is PCBL and GNFC. She's sitting at a loss on both of these counters. When it comes to PCBL, it's a 13% loss and 17% as far as GNFC is also concerned. Now she can hold on for one more year, but she wants to know from you if you think she should be holding on or selling at this point.
Okay, talking about first PCBL over here, in this counter, definitely we have seen that the stock did make a high around 575 levels, and from those levels we are seeing the formation being changed over here. The stock has now turned into a lower high and a lower low formation, and from the current highs also, which we have made around 422 odd levels, PCBL is seeing a fall again coming into this counter. Again, for 340 is the odd level which the counter should be retesting it over here. So I would suggest in current state to exit out of this one, as the loss can be more over here. And talking about GNFC over here, in GNFC particularly, we have definitely seen the fall coming in the recent times, but the fall has not been that intense. If you're looking up at the broader chart over here on the dailies, the support level is around 500 levels for this counter, and from there we are seeing an upward swing coming in over here. So GNFC is in hold coming in at these levels, and on the lower level, the stop loss that she needs to maintain is at 500. On the higher side, having crossed the level of 600, we'll see a further rally coming in over here where the stock will retest 650, and post that we'll see further highs till 700 in this counter.
All right, this next query that I have is coming in from Nitin from Maharashtra. Kunal, he wants to know about Dixon Tech. 16,000 is the buy price. Should he hold average, and what's your take on this one? I think every day we're getting a query on Dixon Tech. Yesterday the buy price was around 17,500. Today is about 16,000.
Yeah, so I think the stock has seen a sharper correction. I think the recent highs for Dixon Tech in 2024 December somewhere was around 19,200 levels, and from there the recent low was around 13,600 mark. So it's been a decent sharp correction for Dixon Tech by a margin of 5,500 odd points, which is a good 20-25% for the stock. But then it still looks like that the stock has not yet settled. The kind of negative candles which we see, the volume sell-off which we've seen in the last 2 weeks for Dixon Tech, that indicates that maybe you could be in for a maybe one more round of correction into the stock. I would sense that closer to 13,500 mark, which is the previous swing low for Dixon Tech. If you happen to get these kind of levels for the stock, say over the very near term, that could be a zone where you may look to buy.
Alright, the Next one that we have, in fact, Kunal is also coming in for you. Venu, who's a senior citizen, is writing to us from Chennai, wants to know about the high flyers of 2024, as he's called it. And of course, that includes Dixon Tech, Trent, RVNL, Cochin Shipyard. Those are the ones that make it to his list. And he's asking if these are the stocks that he should be avoiding at this point.
Well, absolutely, I would believe so, because what happens with every phase of the market correction as well as the market recovery, there are new leaders which the market's established. So the leaders of the previous rally, they generally take a a bit of a back seat. Just to put this into context, in the last 1 to 2 years, we saw the auto stocks, the FMCG names doing exceptionally well for themselves. There was a point where many of these auto and FMCG names gave CAGR returns of 20-25% consistently. But now comes a point where these stocks have underperformed, and that underperformance, I believe, could continue. Banking stocks were underperformers in the previous leg. They are starting to look a lot more robust. Financial names were the ones which were going through a very tired kind of a consolidation. But I think you're seeing many of the financial stocks making a comeback. So yes, I think I would probably sense that the favorites of the previous cycles, Trend, Cochin Shipyard, etc., I think these stocks could remain into an underperforming zone for quite a bit of time. So it makes sense to shift towards the emerging patterns, where you see fresh leaderships, whether it's in terms of sectors or stocks, and try and allocate money over there.
Right, that is something even Swanand Kelkar actually spoke when he spoke to us, did speak about how these narrative stocks actually tend to underperform after a point in time. And given the fact that all these counters, which Kunal also mentioned, perform pretty well in 2024, chances are that they can not give the similar returns this year as well, right? Because we tend to be very greedy, Kunal. We want the same performance year after year. Looks like Dil Mange Mo, and it doesn't stop at all at that.
Absolutely. So it's not about greedy, Cheryl. I would sense that it's more of history repeating itself. So someone who's missed out in the previous cycle, for example, if someone would have looked at trend moving from say 4,000-5,000 towards 8,000 levels, and if he gets the stock back again at 5,000 levels, the assumption or the anticipation is that history would repeat in the very same manner, and from 5,000 you will see the stock moving in a vertical manner towards 8,000 mark. That generally doesn't happen into stock cycles, and especially at a point where the markets go into a severe undercurrent, and this time around it's more on the selling side, and that generally changes the phase, the texture of the markets completely. And that's a point where you should start looking at that you don't want to buy the stocks which you've missed in the previous cycles, but you want to buy and position yourselves in a much better way with stocks which could run up and maybe leaders of the fresh or the upcoming cycles.
All right, the next one that we have, Dhwani, is actually coming in from Amit, writing to us from UAE. He wants to know about 500 shares of Voltas that Amit is holding on to. Buy price was 900 rupees. And he wants to know if at this point he should be buying more of Voltas. What do you think?
Absolutely. We did see Voltas having a recent rally up coming in during the budget cycle, where we did see an intraday gain coming in on this one. But post that, again, the stock has resumed its short-term correction over here. And on the lower side, we are seeing the stock being beaten down. On the lower side, I would say that the support level for this counter is at 1150 odd levels. So I would not suggest him averaging at these levels. Wait it out. On the lower side, if you are holding up a long-term perspective, this is the level where you should be averaging out around 1150 odd levels. And from there, you can look up at holding onto this counter.
All right, a quick note for all of our viewers that please do write to us on the WhatsApp number. We will not be able to answer your calls on the WhatsApp number. So it's better you write to us and we will try and take as many queries as possible. The next one is coming for you, Kunal. This one is coming from Achar, who's a 50-year-old gentleman who's writing to us from Madurai and wants to know about which stock to buy for put options with the expiry of 2 months from now in the large cap and the mid cap space.
That's a big bouncer, but so I think
he also has mentioned that he's a very big fan of yours and the show, and as well as Dhwani.
Thank you so much for that. So again, I think putting that into context, a very difficult spot. But I would look at Zomato as potentially a stock which could retest the lows of 200. Now, I'm not sure whether it would happen in the next few weeks or in the next 1 to 3 months. But I've seen that whenever stocks come back into a sharp selling spree and on the back of news flow, sharp negative news flow, the stocks get into an immediate relief rally. But then that relief rally ideally gets sold into, or the stocks or the bounce doesn't get sustained into these names. Look at it in this manner also, that Zomato had fallen sub the 200-day moving average, if I'm not wrong, when it had fallen to that 200, 205 odd mark. From there, the stock has bounced back again, and it's unable to break past convincingly above the long-term averages, and is now returning back into a downward trajectory. So my sense is that the stock ideally would form a low once the 200 level gets breached. So I think that's the only stock which I would probably recollect so far. I'm a bull by nature, so if you ask me for bullish stocks, that will be a much more easier question. But from a bearish play, I think only Zomato comes into the thought of my mind.
All right, then that's a take coming in from Kunal then. But moving on, the next one that we actually have is coming in on sale, Dhwani. We do have Indu who's writing to us, sitting at a 20 to 25% loss when it comes to this counter, and she wants to know what your recommendation is here.
Of course, the counter has definitely seen some beating over here. On the higher side, we made a top around 175 odd levels, and from there was no stopping on the downward channel that it is making. And from the current level also, there is further cut that can be expected over here in this particular counter. If I'm looking up over here at the weeklies also, it's at an important juncture over here. On the weeklies, given that we are sustaining above 100 odd levels over here, we'll see the bounce coming in. But given 100 breaks down on the lower side, the stock will see further cut coming in. So in my suggestion, hold on to it. Give 98 as a stop loss over here. On the higher side, having crossed above 110 to 115 odd levels, we'll see further rally coming in over here in this counter, and the bounce can sustain over here till 140 levels. So in my suggestion, 98 is a stop loss for the short-term basis that you must keep in, and hold on to it.
Right, so that's the take coming in on sale. The next one I have is coming from Sudha. Wants to know about NTPC Green. Kunal, will you be able to give a view on NTPC Green, whether she can enter right now or wait for some more time? I know it's a limited chart history for this one also.
Yeah, limited chart history, and again a stock which has dragged, post its listing as such from 155 levels, which was the high in December 2024, towards 107, 108 mark. And the volumes have dropped down. The activity has been very lull for NTPC Green. So again, a stock which I would probably expect that the stock may just about get into a further drag mode. Now, the good part about the stock is that the lows for the stock, which the stock has been making, is very close to the current price for the stock. For example, the recent high for the stock is around the 115 mark, and the low, the triple low the stock has been making is closer to the 105 to 107 levels, which means that the range is getting a lot more tight for NTPC Green. So ideally, I would suggest to wait for that 115 breakout for the stock, and if it happens on the back of, say, good volumes in the next 1 week or in the next 10 days, that's the point where you should look to enter.
Alright, and those are the levels that you should keep in mind when it comes to NTPC Green Energy then. But those were all the queries that we could pack for you on this edition of Buy Now, Sell Now on ET Now. Thank you so much, Dhwani, as well as Kunal, for joining us and for answering all the queries patiently. But with that, it's time for a very quick breather on the show. More updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, the Nifty is trading with a cut of 0.5%, but when you see the moves coming in for the small caps and the mid caps, there is where you're seeing a deeper tinge of red at this point. In fact, we caught up with ICICI Prudential's S. Narain in an exclusive conversation. Let's go across and listen in to what he then had to say about the broader indices.
How many people are 20-year SIP investors? That is the challenge of what I have seen in the markets, and that is the biggest challenge at this point of time. And I was surprised. Last week I had a talk in a FIFA IFA event. So they presented me a book written by Devina Mehra. I opened the first chapter. It says asset allocation is more important than stock picking. I was so happy to see that, and that is the reality. Everyone is obsessed about stock picking, but asset allocation is what determines everything. And people have just ignored debt in the last 5 years. If you go and tell anyone that debt is an asset class, and my CIO debt is never called on by any channel to talk on debt, that is a reality. But so asset allocation is more important than stock picking. How to convey it to people? And that is the reality. And luckily, I would say, 2 years back, my CIO debt helped me in saying that we have to push multi-asset, which had gold in it. If that was not done, I would have said that it was one of the best investment decisions that happened. And it was because of both of us that we actually realized that gold is a very good asset class. So I believe, the amount of effort that people spend in asset allocation in this country is much lower than what they spend in stock picking. In stock selling, I don't know whether they spend in stock picking.
What is the right allocation in this kind of a market where valuations exactly are not attractive, but the long-term growth prospect is still very strong? I mean, what should be a right allocation for next 3 years, 5 years, and 5 years beyond?
is very tough at this point of time. The hunt for an undervalued asset class is too tough at this point of time. That is why in many of the events, I feel that bank FD and debt mutual funds look to be the most undervalued because they are the ones which have done very badly in the last 5 years. Normally when I look at it, and I would say office yields are the third, which look very attractive. So, normally when you do asset allocation, you have to identify the worst performing asset class on 5 years. So, on that basis, we've been recommending bank FD, debt mutual funds, and office because office yields are better than residential yields. So these are the three areas which look the best at this point of time.